ever done. We've just now been able to optimize what we've been doing for Forex traders that want to use NinjaTrader. Now, if you don't use NinjaTrader yet, and you're a Forex trader, there's a chance that you use MetaTrader. And we have a lot of reasons why uh, switching to NinjaTrader can have a lot of benefit for you. And we're going to talk about that a little bit as we go. But first, I'm going to start talking about basics of our bunt trading, okay? Because we do have a lot of Forex traders that really just never really had a lot of interest in what we did because our system, our indicators, were not tuned to Forex. Although we have a lot of people using them for Forex, our trading system and indicators were not tuned for the Forex markets. With the release of NinjaTrader 8 and some of the underlying features and upgrades that they made with NinjaTrader 8, we're able to do some things with some of our more important indicators or essential indicators that allow Forex traders now to be able to just use the indicator without going through a routine of having to tune that indicator for each individual instrument. And for Forex trading, it was particularly cumbersome and difficult. So a lot of people would just choose not to, or would give up, or just didn't want to spend the time on it. So we did recognize that this was an issue for Forex traders back during NinjaTrader 7, but because of some of the limitations of the platform, we were unable to really help much with that. Now with NinjaTrader 8, we have a whole new approach, and we're really excited about what the indicators can now do for the Forex traders. So I'm going to come in and I'm going to give a nice little presentation as fast as I can, because I know you guys want to get to the Forex part of this. But we're going to talk a bit about the bunt trading. This coming Saturday, we're going to have another event where we're going to talk more about bunt trading and the basics of bunt trading and why we do it and how we do it. And we're also going to expand on the Forex part of bunt trading now that we're doing, and how you would go about using the NinjaTrader platform to trade Forex, okay? So that's this Saturday. Now, we've got a registration there for you. If you're watching this on video now, then you will want to use this link that you see right down here to register for the event on Saturday. If you're here and you're already registered and you're in the trade room or in the meeting room here, you're already registered. We already got you covered, so you don't have to do it again. Of course, if you wanted to, I mean, it wouldn't hurt anything, but you don't have to do it again, okay? So here's what we're going to do today. I'm going to do a little presentation that kind of give you a general idea of what we do here. And then Praveen is going to come on. Praveen is our tech support guy. He's our training guy. He's our basic go-to guy for anything technical here. Then he's going to come on and talk about trading, our bunt style of trading, what we call bunt X, for Forex traders. And he's going to also give you some information on why NinjaTrader is so much better than MetaTrader. Now, Praveen actually came to us many years ago as a Forex trader that just couldn't seem to get any traction. So he came over and he started trading with us, trading futures with us, and was very successful at that, and has been doing that ever since. But he does have a background in trading Forex, so he does have a pretty good knowledge on the Forex markets and how they've changed over the years, and how much different they are today than they were even just a couple of years ago. And then we're going to I'll go over, I'll come back on. We'll do a special offer that we have for you guys. And then Praveen and I will do a very short question and answer period if you have any questions. If you want to wait until Saturday, that's fine too, because we're going to put off most questions until Saturday because we want Saturday. Saturday, we have as much time as we want. Today, we're trying to keep it in about an hour. Okay. So if you are curious, even after we talked today and you've seen Praveen today, and you're a bit curious about the difference between NinjaTrader and MetaTrader, we have a video that is up on our site. I think we have a link that's about to get posted in the chat here so that you can either type it in. If you're watching this on video, you can type that in, or you can click on it in the chat right there that Connor put in. Okay. So we have a pretty informative page on the website about a comparison between the two platforms. And after you watch the video and you see the comparison, it might make you think real long and hard about changing over to NinjaTrader. Okay, so what I want to talk about today is these small pullbacks that give us these tremendous opportunities in the markets. So I'm going to ask you this, and then I'm going to ask you again after we've been through this whole presentation. I want you to look at this chart. And if you were a trend trader, I mean, and this is a very typical chart. I didn't have to go very far to find a chart that looked like this, right? But if you're a very typical trend trader, you might have some sort of a trading system where you get a buy signal maybe on after you broke the third or fourth high or low or something, and maybe that was your point of entry. I've seen trading systems very similar to this, something like that, where that is your point of entry. And so say that you put on a buy order here, and your target is up in here. Okay, so you have a predetermined target, whatever your trading system is. And ideally, you just want to see it go from here to here. But that rarely seems to happen. What tends to happen more often than not is something like this, where you just have to ride it out and ride it out. Potentially, now look at this big long bar here. With this is something that happens quite often nowadays. Didn't used to happen as often because the market makers didn't have the abilities to move the markets the way they do now. They certainly had the ability to do it, but not in the speed, not the way they have the abilities they have now. So you try to ride this out. There's a good chance that if your target was up here, your stop was down here somewhere. So a good chance you got stopped out, and eventually it may end up going to your target for just a few ticks, or whatever this is. This is a very typical trading system here. This is something that many that when I was trying to trade, many systems like this, that, man, this looked good. And I could go to a webinar and I could have a guy show me something that looks like this, and he would show me all these times that after the third lower high or high or low, it's going to bounce or whatever. There's all kinds of systems out there like this. So does that seem to make a whole lot of sense to you? Or would something like this, where at the same time as you're trying to knock out these bigger trades so that you can make a lot of money, right? If there were a lot of smaller opportunities within the same time span, smaller yet higher probability opportunities, would that make more sense? Okay, and I'm not going to answer it for you now. I'm going to go through some stuff and then I'll let you answer it later. Okay. Now, what this may require for many of you is a change of perspective. Okay, you come into trading believing certain things. We look at this Penrose stairs here, that's what this is called, and it looks like that no matter what, if you're walking this way in a clockwise direction, you're just going downhill the whole time. And this is what it looks like to us. So this is what we tend to believe. Well, this is what I see, so this has to be true. I don't know what it is. I don't understand it, but I just got to go with it. Okay? So I'm going to ask you to change your perspective a little bit, meaning look at it from just a slightly, what I'm asking you to look at is trading from just a slightly different perspective. Now, when we do that with this, suddenly this picture, you look at it like that, and then you just slightly change your perspective, you'll notice a completely different picture than the one that you thought you were looking at, okay? So this is actually what you're looking at if you allow yourself that change in perspective, okay? And that's all I'm asking you to do is for a few minutes, kind of rethink this trading thing, or at least allow yourself to drop some of your assumptions about trading, okay? Now, that last trade I showed you looks something very much like this, and for me and for most of us, that type of trading turns into a terrible emotional roller coaster, And so the conventional wisdoms, what most of us learned in a relatively short order when we're out there trading is, and researching trading, is that the trend is your friend. But nobody ever really tells you that it's really nearly impossible when you factor in emotions. It's almost impossible for single and small contract traders, small lot traders, to be successful. Now, I'm not just saying that. It's statistically proven that you will not succeed in overcoming your emotions as it relates to trading. Statistically proven. You can say you've done it, you can try all you want to do it, but statistics say you won't do it. Okay, there are a few that will. So I finally came to that conclusion, and I decided, well, if it's statistically, I'm not going to be able to overcome my emotions, which is what I hear has to be done. Maybe I should find something where I don't have to try to overcome my emotions. Maybe I should be doing something else that didn't require as much emotion control. Okay. So I started thinking about this. I kept trying to hit home runs every day when I would sit down to trade. And I was really, really swinging for the fences. And, you could say it was greed. More likely it was fear and panic and trying to get money back that I had lost. So I felt like, man, if I don't make $250, $300, $500 a day, I can't be successful at this trading thing. So I've got to start today and try to make $300. I have to make $300 today or I'm failing. Okay? So we're trying to have these big winning days. And I finally figured out, you know what? If I can just get ahead, if I can figure out how to just get on base, I'm going to be much further along than I am now when I'm trying to make $300 a day. What if I just try to end the day as a winning trader? Just that. Just do that consistently. And then build from there. Just get on base. You're not going to score, but you're going to get in scoring position. Okay? That's where the bunt trading came from, if you're curious. So as I mentioned, we trade pullbacks, right? And we're all about increasing our odds. So what I'm looking for is places that are very obvious where something dramatic happens. Something happens where price stops and turns. Okay? So you can look at pretty much any chart and you can pick up that something happened and price stopped and at least pulled back a little bit. Okay? So this isn't rocket science. When you start thinking about this, this makes a lot of sense. So now all I have to do is go in and analyze everything that's going on in the market at the instant that these bars are occurring where the next bar pulls back. Okay, so my mission was to figure out what's going on inside this bar so that I can anticipate this bar. Okay, and it's deceptively simple. Now, why do they give us such an edge? they're very predictable. You know that no trends go in the same direction for very long, right? No trends continue to just push in one direction. Never have, never will. Guess what? That's predictable. All trends are going to pull back. Why? Because people are taking profits. People are getting stopped out. All right? So all trends are going to pull back before they continue. All you got to do is know how to understand when that's likely to happen. So all trends are very predictable in that way, which gives us the ability to create very precise trade entry rules and management. All right? There's no difficult chart patterns to decipher. All we have to do is look for a confluence of events that happen all inside of a bar, or at least a short series of bars, to identify that exhaustion is likely to be setting in. Okay? So because this is so straightforward and it's very easy to design rules around it. And the nice thing is most of these trades are generally ignored by the retail traders because most retail traders are trying to hit it out of the park, right? We come in and we say, I got to make $300 a day if I'm going to make this trading thing work. And if I don't make $300 today, I failed, right? So they're ignoring those great opportunities because they feel that they've got to start making the amount of money that they need to be making to make a living. They got to start doing that right now. All right. So some other advantages: smaller drawdown potential. Yeah. Do I have huge winning days? Never. It's impossible for me to have a huge winning day. It's impossible for me to have a huge losing day also, based on the way that I trade and my trade rules and the small drawdown potential. I have very limited market exposure. Where is the safest place for your trading money? Where does it need to be? In the markets is not the place. In the markets is a very dangerous place for your money, particularly with these high frequency traders, these trading robots that are out there manipulating the markets. You're just sitting ducks sitting out there. The sooner you can get out of the market, put your money in the bank, and relax, the better and the safer it is. So the longer you're in a trade, the more speculative it becomes. Now, they say, oh, the trend is the way to go. The trend is your friend. You got to trade with the trend. Well, if the trend's going sideways and it keeps you in a trade for an extended period of time, yeah, it's not so friendly. Okay? It's speculative. So because of this, we're in and out of the market so fast, much less stressful. If you want to come hang out in our trade room and see how little stress there is, it's about the most laid-back trade room you've ever been in. And it's easy to quantify when these pullbacks are likely to occur because we have lots of different data sources, and when they all suggest the same thing, that exhaustion has set in and it's likely that price is going to turn, and they all agree with each other, it makes it real easy to make a decision. All right, so what's a bunt pullback trade? Okay, so it's really simple. And we see this all the time. This isn't a cherry-picked thing. This happens to be something that I probably, an image of a trade may have been yesterday and it could have been 4 years ago. Really, it doesn't matter because it's the exact same thing that we do day in and day out. What we're looking at here is a confluence of events. Okay, right here. A confluence of events suggesting that this push is going to lead to this pullback. Okay, so these events are, we're using order flow analysis, we're using volume spread analysis, we're using divergence, we're using momentum, velocity, and exhaustion and the potential for exhaustion. All of these things, when they come together, And now this may look confusing, but it's actually really simple. It's really simple. And you notice where the indicators are. Everything I need to make a trade decision is right here. These are called our heads up display indicators because they print right in front of my eyes. I don't have to look anywhere else. I don't have to have 12 monitors. I don't have to have 3 different time frames. I don't have to have any of that. Everything I need to know is right in front of me. And the decision making is yes, no. It's not like, well, this is kind of like this and this is kind of over here. And I kind of like the way this is looking. That one doesn't agree, but I'm going to ignore that one because I really want to get into a trade. There's none of that. It's yes or no. And it's all about timing. Okay? So these are what we call high performance indicators or real-time indicators that give us information about the current condition. Okay? From the data that's coming in right now. There is some very funny, and I used to believe everything I read on the internet too. And it makes you sound so smart when you regurgitate the same thing over and over. And I get people that say, "Oh, all indicators are lagging," and it's funny. I was like, I was on board with it. I was like, yeah, indicators are lagging. So how can I make a decision right now based on what's lagging? And so that's their reasoning or excuse for doing something else or whatever. I don't even know anymore. It's a bunch of crap. Indicators can do just like what your speedometer does in your car. What does your speedometer do? Is it lagging? Or is it telling you how fast you're going? Is it an indicator of speed? This is exactly what we do. Our indicators tell you what's happening right now so you can anticipate what's likely to happen coming up immediately. So we have very easy timing of of trade entries using our indicators. Let me show you a video real quick. I have one up here. I can't remember which one this is. Oh, this is just from our trade room last week. Let me back this up. And it's blurry, folks, because the trade room video that we record inside of our trade room, there's a recorder, and to keep the images and the recordings from becoming too huge, they're a little bit blurry, so I apologize for that, but it doesn't affect anything. Okay, look at that. This was last week, the 8th. This was on the 8th. Now, that looks a lot like what I just showed you, right? And that image could have been 4 years old. This is exactly what I'm talking about here. We have a big push. We have a strong potential for exhaustion. I have an overbought condition. I have our tape reading ability here, which is reading the speed at which the ticks are coming into the market or the orders are being processed. Major support, minor support, our pullback alert. Notice when these indicators printed. Okay, these if these are lagging, then I don't know what real time is, because those are printing in real time and reporting the current condition of what's going on inside these bars. And then we have a signal right here that tells us with all this confluence, this has a high probability of doing that. Okay? And that's all it is. And we do this over and over and over again because that's all we need. You saw that little bloop? This is my sweet spot right here. That's all I need. That's my edge. Now, did I just make $300 on that? Well, I might have, because I get so good at that. Maybe I go from learning how to trade one contract and then I start nailing these, just absolutely slaughtering these setups. And then I start trading 2 contracts and keep doing this. And then I start trading 3 contracts and then I keep doing this. Okay, so you don't have to hit it out of the park. Anybody look up sabermetrics for baseball. Same thing. All right, same thing. Boom, we had a signal here. I'm not going to go through all the details. Signal here, boom. Praveen will go over some of this with you, but that's it. That's all we need. It's really, really simple. You just got to know what to look for. Now, this whole thing about all indicators are lagging. Well, here's the problem with that statement, and that is that people are expecting the indicators to make decisions for them. And if you're making a decision from an indicator, your decision is going to have to lag until the indicator gives you a signal, right? So what are trading indicators? They're nothing. They're nothing. They are not decision-making tools as far as making decisions for you. These tools you see here don't do anything except make your job easier. They will not do anything for you. That's why nowadays, you know, a smartphone, you could certainly set it to do an alarm or whatever, but they're tools for you to learn how to use and use them. So, okay, so that's what an indicator is. It's a tool to help you make decisions. To help you make decisions, not to make decisions for you, okay? So what do we do with them? Well, we put them on charts, obviously. So we end up with something that looks like this. Okay, well, let's get a little bit more basic. So what's a chart? What's a trading chart? I get all kinds of answers when I ask this, and I'm not gonna wait for answers today. Because a trading chart is probably not what you think it is. A trading chart is nothing more than a graphical representation of what people and institutions think and feel about price at a particular point in time, and that's it. That's all it is. Thoughts, feelings, and emotions about price. That's it. So, what indicators should we use? How about the ones that take the least amount of effort to read and understand what that indicator is trying to tell us? So that's where we come up with our indicators. They don't do anything other than give you information from which to make decisions. Okay? Now, here's what is very typical for most figure indicators are going to do. You know, you're going to look at charts like this, and mine look like this. So what I want to say is each one of these charts has a trade setup on it. Can you find them? Can you find the trade setups? And let's just pretend that you can. And let's say, yes, we have a confluence of events. But how hard is that to figure out, particularly when you're stressed out? Very difficult to see and read what's going on. So I decided, you know what, I can't do this. We're going to create these heads-up display indicators. We're going to make it simple. We're going to do what these fighter pilots do. We're going to put the information right where you need it. If you look at these two charts, it looks like this is the one on the right and the one on the left. Looks like two separate things. They're identical charts with identical signals on them. All of these indicators, including this, all of this is right here. Now, the information we don't need is not here. We don't need it for making a decision. Everything we need is right here. Makes it real easy to make trade decisions. So we've got confluence. We've got it easy to see and read. So we've got our rock star setup. All right, we've got the rock star setup that it actually got its name in the trade room by our traders when we started trading this setup. It's got 10 levels of confluence suggesting price is done. That price is tired moving in that direction, at least a little bit, to the point where we can anticipate that little pullback. So we've got momentum, which is that strong push, this strong push right here. We've got an overbought condition, which is this pink outline. We've got our speed tick indicator, which is reading order flow or orders being processed through the market. We've got our ricochet, which is also reading that, but reading how fast the orders are going through relative to an earlier period. Okay. Then we've got our pullback alert, which is basically volume spread analysis. It's reading the volume, the right kind of volume inside the bar. Okay. All bars have volume, but we're only interested in certain kinds of volume. The kind of volume that gives us an indication that price is going to stop and turn. Okay. So we have a couple of divergence indicators, which is our flash and our McDiver. Divergence suggests that even though price is going this way, momentum has changed directions. Momentum is now going this way. So when we couple exhaustion and momentum going the other way, man, that's a rock star right there. That gets us, all of us, those of us that are bunt traders that are here watching this. We see this all the time, and we see it now in the webinar, and we go, oh yeah, enter, jump, get in, jump, go, because that's a no-brainer. That's our rock star setup. So we've got major resistance and minor resistance to help us in the event that trade has a little bit of steam left in it. Maybe this resistance or this resistance will hold it so it doesn't go against us. So that's kind of like a safety net. All right. Now, I told you Praveen's going to come on. He's going to come in and talk to us more about how to use bunt trading on Forex charts. Okay. Praveen, I hope you're ready. I'm going to, let's see, I'm going to stop sharing my screen. And can you hear me, Praveen? Let's do a mic test.
Okay. Can you guys hear me?
Yep, gotcha. Okay. Did I stop projecting? Did I stop? Yes, I stopped. You can project.
Okay. One moment, guys. Okay. Hopefully everyone can see what I'm seeing. Okay, looks good. Fantastic. Sorry about that. The projector kind of froze. Technical issues, even though I am in technical support, technical issues still do happen to me. Okay, so glad to meet everyone. I'm Praveen. You probably haven't heard of me, as I'm basically after sales support. So if you're interested in our indicators and you wish to obtain a package, and then you obtain the package, I'm the guy who basically comes in, sets the indicators up for you, shows you how everything works out, and then if you have any questions, any queries that you may have, I answer them. And especially if you're VIP, you get the full treatment where you have where I teach you how certain setups work. So I offer basically the full after sales package, mainly technically speaking. So today, what I'll be talking about is basically the forex part, or the forex aspect of bond trading. So bond trading, even though we've traded mainly on the futures side. Sorry about this. Someone told me that the left side is a bit too small. Hopefully that's okay. Okay. So bond trading is usually done for futures, and like what the last said, the traders that we had that were forex traders, they came in, and although our indicators do work for forex, they weren't really truly optimized for forex because our indicators when released were specifically tailored towards the futures market, because the futures market and the forex market, as you guys probably know, have completely different fundamentals. The market structure of a futures market is based on an exchange, whilst the market structure for forex is basically based on over-the-counter banks. So these banks, they have different ways of trading, and it leads up to spreads and slippages and different brokerages. And that's why in some brokers they may have great data feeds, the other brokerages they don't have the greatest data feeds. And not only that, forex it trades overnight as well, whilst futures markets, although they trade overnight, it's not as predominant during that time. So forex does have a few kind of unique idiosyncrasies, but in the day, it's still a market, and we've worked tirelessly to ensure that the indicators there are now indeed in the futures. Sorry, in the forex aspect. Okay. Thanks, Sophia. Thanks. Yeah. So let's get started with the slideshow of how the futures work in how we trade futures in the bond style. So as I said before, we set our settings basically for the majors. So we do have settings. If you ask them, we have settings for Euro USD, and we provide these settings too. For the Euro USD, which is the quintessential forex pair, I think everybody trades the Euro USD. The USD JPY, so the US dollar against the Japanese yen, the Australian dollar against the US dollar, and the Great British Pound against the US dollar, because those currencies, they have the most volume. They're the majors. They're in every brokerage. So even if you don't wish to trade through a gain effects, which is basically NinjaTrader's brokerage partner, if you don't want to trade with them and you want to trade your trades in a different broker, totally fine. You can still use NinjaTrader, but you can just trade with a different broker. So that's totally fine. So we've included all these currencies, but if you do need to trade, say, the Euro against the JPY, or you want to trade any other markets, then let us know, and we can indeed make a deal. Or we have documentation which is quite descriptive and should help you quite a bit in tuning these things, tuning these indicators. And now, with that aside, if you guys have any futures experience whatsoever, you know that with futures, people don't really trade, although it is a big thing, people don't really trade using boards or the chart trader, although the chart trader is popular. The static superdome doesn't really play much of a part in futures, more in the forex, much of a part in forex, but not in futures. So the alternatives in NinjaTrader are basically the chart trader and the FX trader, or the FX board, which is basically NinjaTrader's answer to trading FX, and I believe it's much better than MetaTrader. And trust me, as I did come from the MetaTrader background, back in the day when I was a forex trader, I traded with MetaTrader, and the spreads and the markets were pretty pretty bad. You know, they got all these kind of shoddy, really like bad brokers, really horrible folks who just they didn't really do much to with the trader. Most likely just operating like a gambling house. So it wasn't really that great. So nowadays the forex the brokers have cleaned up quite a bit. So, but you have to make sure that you take into account larger spreads. This is another thing that is a major difference between futures and forex. In futures, you don't have to really concern yourself about spreads or slippages or stuff like that, because you don't really need to worry about that, since spreads are almost non-existent. They only happen during extreme market turbulence. But nowadays, you shouldn't concern yourself too much, because brokers have been commoditized, meaning that they're basically they have to compete with the price. They have to get someone's business. They have to compete with price. So the only way to do that is through the spread. So most brokerages nowadays, they have razor thin spreads, but please do ensure that you take it into account for spreads. And when you take into account for spreads, your profit target or your target and your stop loss should dynamically evolve or change for the broker that you're trading with. So make sure of that. Because of this, we trade usually with a 7 tick in futures, but in forex, same terms. I mean, different words, but they're all essentially the same. So a 7 pip stop, and a 6 pip target is what we use for forex. So instead of using a 5 target, we use a 6 because we have to account for the spread. And not only that, unlike futures, the forex market, like I said before, is 24 hours a day, and since there's a lot of liquidity throughout the day, the liquidity is spread out. So the market isn't. Oh, sorry, the liquidity isn't concentrated into one particular time. So since it's spread out, it trades a bit more slowly. It doesn't mean it's bad or it's untradeable. It's just that it takes a bit more time for setups to work out. So that also means you can dynamically adjust your stop target, your stop and your profit target as well. So I tend to use a 6 target, but this is completely up to you. If you're trading 5 minute, then I would say, for my analysis, have a 10 tick or 10 pip target, and have also consequently 12 pip stop, and then you manage the target dynamically. And I will show you when those trades do happen. Okay, so now using forex with NinjaTrader, let's actually get into the nitty-gritty. So this is basically, as you can see right here, it's basically NinjaTrader's answer to MetaTrader's limit order or stop limit order, and they have that FX board. This is basically NinjaTrader's answer to that. And as you can see, it's much better, much clean design, and has a much cleaner interface. And you can use the chart trader, which is a unique feature to NinjaTrader that can really help in taking a trade right on the chart. So you can take a trade right on the chart, and I will show you this indeed in the videos, or the small videos that are prepared, which show you how to use these features in NinjaTrader. Okay, so let me just exit or quit this presentation for a bit, so I can show you the differences in NinjaTrader and MetaTrader. So we've compiled this website called Forex NinjaTrader versus MetaTrader, and it's a great little website that shows you the differences between MetaTrader and NinjaTrader. And I would like to explain a few of these, because I understand that a lot of people, including myself, when I was trading in Forex, I was a MetaTrader. Because when you come in as a Forex trader, you come in thinking MetaTrader is the only trading platform in the universe because everyone, Alpari, Pepperstone, FXCM, or GoFX, I mean, they all um, say that MetaTrader is the platform to go to. But actually, if you look just a bit further, you'll see that NinjaTrader is actually a very hot up and coming platform, and we've been using it for 8 years, and it's been going pretty well. And I personally fix platform or fix indicators for NinjaTrader, and compared to MetaTrader, the functionality, the extensibility, the the user friendliness to using it is actually much better than MetaTrader. MetaTrader contains everything into one platform, whilst NinjaTrader, they tend to have a more open layout, which is perfect for multi-monitor setups as well. So let me just explain a few of these features. So it's free to use, completely free. It has free data. All you have to do is go to ninja.com, so ninjatrader.com, enter your email, press download now. You'll get a message saying, do you want to get free data? And yes, you just press yes, type in your username, your name, and your email, your phone, the typical details. Press submit, and it will send you to another page for a download. And that's it. It's very easy to use. It's a brilliantly unified experience. And then afterwards, you'll get an email directly from NinjaTrader the instant you sign up from FXCM that says your personal login details has been created, and you can go and trade demo with NinjaTrader, and you have a thing up to a month with NinjaTrader, I believe. But that could change, so I'll have to let you guys know. Okay, so market replay. Now, market replay is by far NinjaTrader's best feature, and it cannot be refuted. I've tried other platforms in Forex, especially, and the ability to go back in time, practice a setup, and actually practice it like you were in that day is just incredible. You do have other features like go back or whatever, it's in think or swim, think back or whatever, but that's only in Pacific markets, and it's quite limited, and it's clunky, and it has the classic TOS feel. But in NinjaTrader, it's simple, it's fast, and you can replay futures, you can replay Forex, you can replay anything that you want. So even if you decide to go into futures, you can still use market replay. So market replay is basically a feature that allows you to go back in the day, like I said, replay that trade, and then replay that trade using Chart Trader or FX Board, and that cannot be reproduced in any other platform. Not only that, it has reputable vendors, so every vendor has to be checked with NinjaTrader to say they don't want to. NinjaTrader doesn't want to have strange or kind of unscrupulous vendors, because it's not good for their customers or for the platform. And it has dockable tabs and windows, and it has chart trading, which I will show very shortly. And the main thing is that it has a unified brokerage experience. So back in MetaTrader, even though they say it's unified, but really you're getting the platform from MetaTrader, then you are linking that brokerage to NinjaTrader. And if you want to contact someone for support, you don't know who to contact, is it to MetaTrader or is it to your brokerage? and your brokerage may play hot potato, so it's never a good thing. And this ties into the technical support. All you have to go to is go right down to the bottom, go contact us, and NinjaTrader will contact you within a few hours after you send a response. After you send an email. It is very fast. And now it has endless out-of-the-box features, and the main thing is it has the best independent best freedom, I should say, for having multiple monitors. With MetaTrader, you're only stuck to one monitor. Like it's within that walled garden of NinjaTrader, and you can't escape that walled garden. It is stuck. But with NinjaTrader, as you can see, which I'll pull up right now, all you have to do is open up the platform, and that's it. Then you can open up a chart, you can open up a FX board, and you can place it on any monitor. So it's very simple and easy. Okay. Let's see. Now, sole user regulated brokers. Now that's a great question, Barry. So there's only one broker because NinjaTrader at this stage they want to control the experience from start to finish. So when you sign up with NinjaTrader, you get the brokerage, you get the platform. That way, if there's any problem with the brokerage, they can just fix it in-house. If there's any problem with the feed or the Forex feed, they can fix it in-house. That's the main reason. But you can indeed just have NinjaTrader if you're still like connected to, say, your brokerage at Powery or something. Then or whoever it may be, you just trade from that brokerage in your other platform, and you can just use NinjaTrader as your charting platform. And I think other people they do that too. Like even in futures, you can have your normal application just for order entry, and you can have your trading application. And that's basically the main thing. The main thing. And this is completely for free. Yeah, so remember, guys, this is everything that you're doing in NinjaTrader. There's no fees attached to it. So even when you trade live, there's no fees attached to it. But you're locked out of some features, and you can just pay a simple subscription fee to unlock those features. But when you're in demo mode and when you're in live mode, even you can get it for free. You're not forced to pay ever for a fee. And the main thing I would say is market replay. So I'll show you a bit of market replay. So what market replay is all you have to do is go to Tools, go to Import, go to Historical Data, go to Get Market Replay Data, go to the Euro USD, and you can download yesterday's data, and that's it. There you go. And you just connect to market replay. So playback connection, that's what NinjaTrader is calling it now. And then you simply go to the date that you want to replay. So 16th, 17th, and then you just check if it's there. There we go. And then you simply go to the time that you want to replay. You press play, and then you open up a chart. So we'll just open up a chart. One moment as I open this up. And there you go. Now you're replaying the exact time of the market. It's as simple as that. It really is. So you just simply, as you can see, the market's moving, and this is like an unparalleled feature. Now you can actually trade whilst you're in the whilst you're trading. So you can easily just open up an FX board. See how easy once you get used to it. At first, it may seem convoluted, but really, after maybe a few hours of using it, you just start to really just become at home with it. And then you make sure you set the right account, which is Playback 101. The Euro USD, which that's the only one we have data for at this stage. And if you want to enter a limit, we can enter a limit, or we can enter at the bid price, buy, and there we go. And now we're in. And if we want to close, we'll close out. So it's as easy as that. Okay, so that's just a small preview of how market replay data works. So if you want to add a feed, that's also easy. So I know you guys are very confused about adding feeds and all this stuff. To add a feed, you simply get these details, go to connections, go to configure, go to Ninja FXCM or NinjaTrader FXCM, enter username right here. So just enter username. I prefer not to connect on startup, just a small personal preference. Enter your password, press OK, press OK again. It's just a disclaimer. And that's it. Now you're connected. Now we just connect to it. And it may take a few minutes to connect. And now you're in. And there's some trades that you've taken beforehand. And that's it. Now you're in. Now you're trading. So as you can see, it's a very unified experience because everything is controlled in-house by NinjaTrader. Now, let's go back to the presentation, shall we? And let's actually see a few trades that pan out, because I know you guys want to see how these trades pan out. And this is basically just an example, just an illustration, just to show you. But like what Tony showed you, the fundamentals still stay the same in Forex. Just because it's Forex, we don't have these extremely varied set of rules. The only thing with Forex is that you have to take into account of the spread. You have to use the FX board instead of the Superdome. If you're used to the Superdome, then using the FX board, it shouldn't be too hard. Yep. And sorry about this. And then once you get used to the FX board or the chart trader, I personally like to use the chart trader. But if you want to use the FX board, we can certainly do so. So the fundamentals, they still stay the same. This is the Australian dollar, and this is the US dollar. Not US dollar, so the Euro US dollar, and this is the Australian dollar against the US dollar, which is a very hot currency which I've picked, because a lot of people are trading the Aussie against the US because of the economy in Australia and the economy in the US. So if you can find these good majors, I would say trade all the majors work perfectly fine with our system. So you just have to find these setups, and when they do happen, then it is like what Tony said. You just literally get on it. It's as simple and as boring as that. But the only thing which we will explain in this slide is basically why it's a bit different. Now, there is a widened time, and the widened time is because of the structure of the market. The market isn't all the volume isn't concentrated into one place, so into one time. Like if you are in stock market in the US, you have to trade between 9 a.m. to 4:30 or 4 p.m. And if you're in futures, you usually trade from 8:30 to 3, USET, US Eastern Time. But in Forex, there is such a vary. So if you're in London, you can indeed trade. If you're in New Zealand or Australia, which is where I am located, you can trade there. You can be trading from anywhere. It doesn't really matter. And now you add the flexibility of NinjaTrader. You know that it's literally just as good as MetaTrader 4. And once you have, if not even better. So what we have here is that we have a clean speed tick with the flash, which is a speed flash. So we have strong momentum coupled with a strong speed flash, coupled with the overs, and a strong touch of the line, and then we have a clear confirmation. And this took around 2 minutes to pan out, but it still worked out in the end. And we have to make sure that we're apparent of what is happening. We find that okay, it is touching the line, it is confirming below, it does have the momentum, it is exhausted, because exhausted movement is the key foundations of our system. So the fundamentals still stay the same. The only thing is that instead of taking a 5 target, we take a 6 target to account for the spread and to account for the widened time for it to pan out. And thus we take a longer spread. I mean, a longer profit target, and indeed, likewise, a longer or a widened stop loss. And remember, this is only for the 1 minute chart. Okay, so we still do have the 10 seconds because it is still a minute chart. But say you're trading a 5 minute chart, then you can expand this to a minute. You could wait for it, and then your profit target could be even increased even more, because remember, this chart will look different on a 5 minute chart to a 1 minute chart. So if we just change the fundamentals for a 5 minute, that will also work out. Okay, now let's get to the demonstration of one of these trades and how to actually see how these trades pan out in the future. Okay, so let me get that video up for you guys. Okay, so right now what we're doing here is that we're adding the ATM strategy. Okay, so right now I'm adding the stop loss, which is 7. We're adding the profit target, which is 6. Okay, we're changing the time in force to day because we don't want it to be a good till cancel order. And then we save this bracket order as IT Forex template, because a bracket order ensures that we are trading safely with the target and stop loss. And then right now we're just waiting for a trade. Now indeed I have to fast forward this, otherwise we'll be here all day. So I fast forwarded it just a tiny bit. So we'll just have to wait for the setup to come. But it should come up very soon. So as you can see, we don't have much momentum. But then when we do have... Yes, Charles, that is correct. You can indeed put a stop loss after the trade. You can. You can't do it in the normal bracket way, but you could just simply enter a stop limit. That's what it is. You can, but you just have to do it in the normal entering trade way. So right now we have this bar. Okay. And then we have a ricochet, speed tick, 2 PBA, and this is a clean setup. And as you see, I'm circling around the bar because this shows you that the bar's almost done. So we have to be ready in case a trade does happen. And right now we're using the chart trader, which is basically how I like to take a trade in Forex, but the FX board is also okay. And then I basically press sell ask, which basically sells it at the current asking price or the current selling price. And then I get filled. Then I get filled using the chart trader, and it automatically places this stop order and buy order or buy limit. So Charles, you can put, so all you have to do, Charles, is basically simulate this by placing a buy limit order and a stop limit order, and then when you're done, just cancel the limit that trade. That's the best way of doing it. So you can still do it, you just have to do it the manual way. Okay, so now we're in the trade. Okay, so now it's working. So as you can see, since the volume is distributed, it's taking a bit longer for it to work out. That's fine. As long as it doesn't penetrate this level or doesn't break this level, then there's nothing to really worry about. The worst thing is that it could move down. And since it is taking some time, I'm just dynamically moving the stop down. So when you dynamically move the stop down, now I'm reducing my loss, but I'm still keeping my same limit target. So now I've greatly improved on my R&R. So let's see how it pans out, because even though it's slowing down, I can just simply move my stop limit down and down and down. And in the interest of time, we'll just move this along. And as you can see, it simply takes it out. So it's as simple as that. We see a setup, it happens, and then we sell at the ask, and then we wait for it to the profit to or the stop loss to be triggered, or we just dynamically manage to trade according to market conditions. I can see it stalling around a bit, not really doing much, but that's fine. I just move the buy stop a bit closer down, and then that's it. It seems very boring. It seems very unspectacular, and it is. It's just literally managing the trade that the market is telling us, and right now, that's it. So that's how you use that's how you basically use the chart trader. But we can also use we can also use the FX board. So the FX board, basically, what we can do is that we have this board, and we just press this button, and this takes us to the Australian dollar against the US dollar, and shows us we have a setup, we have a speed tick, and then what we do is that we simply click the ask, as you can see here. I'll just scroll just a bit. Press the ask. So as I was showing you there, just press the ask, press the sell button, and there you can see it's working. Show you again that press the ask, press the sell, and now we're in. We can see we're in because we're short 100,000 or 100,000 Australian dollars. So we'll see that the profit target is right showing up here. As you can see, it's a very intuitive way of trading. And then we'll see how it pans out. And I'm closely managing, closely seeing if this breaks the level. If it doesn't, then we're okay. And boom. That's it. So that's basically Forex trading in a nutshell. And that basically concludes my part. So questions, everyone? So this is how we take the Forex part and we merge it into NinjaTrader 7 or NinjaTrader 8 in this case, and how we use NinjaTrader 8 with the settings that we have to create this rockstar setup that Tony called it. So hopefully that's enlightened you a bit of how we actually take this trade and how the inner workings of the trade works, and how to start up for a feed and market replay as well. So hope that helps.
Awesome. Thanks, Praveen. All right, I'm going to take over here and start sharing my screen if I can get my screen sharing thing to kick off here. Good job. Well, hold on a second. Let me try this again. All right, so at the beginning, I asked you what seemed to make more sense. Okay, we could either continue to try to struggle to be trend traders, or we could just go ahead and start making some of these quick pullback trades. All right, and now we can do it. We've been doing it in futures for a very long time, but now we've actually been able to fine tune these indicators so that Forex traders can now take advantage of it pretty much straight out of the box. Okay, so we've got a trade room where we trade futures. It's the same system. If you guys are futures traders, you want to come and hang out with us in the trade room, come hang out with us. We're going to do it for nothing. If you go to our sign up page, that's actually pointing to the wrong thing. That's pointing to the wrong link. Just actually email us at the bottom, on the bottom left is where that should have been pointing, on the bottom left at the email address. So yeah, Lisa has it in there, the bunt at theintentionaltrader.com, and we'll hook you up with a free trial. If you're a Forex trader, you'll see the same things. You'll see the same trade setups. We don't trade the Forex markets, but you'll learn an awful lot about us by hanging out in the trade room and what we do there. So just let us know if you want to come and give us a try. Don't forget, we've got the event on this Saturday, the 2 Ticks to Paradise, and then we're going to talk into more detail about our Forex bunt trading, so we'll expand on that a good bit. So we've got a couple of specials for you. Now, we talked about the Rockstar bundle. This is our Forex trade, or our Rockstar trade with the Forex bundle of indicators. And these indicators, if you're specifically trading Forex, will only work on Forex charts, okay? They do not have the ability to be run on other types of charts, only Forex charts. But if you're only trading Forex, that's all you need. So we've got our most powerful and our most popular indicators in this package here. And ordinarily, that's $13.65. We're going to do that for $7.50 until Wednesday. Okay. And that's about 10 o'clock on Wednesday. So if you want to expand on that, and maybe you want to trade Forex and futures, or just futures, we have another bundle special that includes all of our NinjaTrader 8 indicators, including some other indicators that we didn't go over today that's not in the Forex package, including our Super D and our velocity indicators. Will also include remote installation. And we'll give you a month in the trade room with this package. Now, those of you that are Forex traders, but if since we don't trade in our trade, we only trade futures in the trade room. If you want a month free in the trade room, if you want a Forex package, but you'd also like to hang out with us for a month in the trade room, we'll be happy to let you do that also. So we'll include that in the first special offer. So in this one, we've got a $3,600 package down to $1,770. So these are the two offers. Now you'll see down here in the bottom right, this is the page. We also put it in the chat there. But for those of you that are watching this on video, here's the page right here. This is how you can get to the, right down here on the bottom right, how you can get to the page with the specials. We do have a 6 months no payment special with PayPal if you want to get up to speed and learn as much as you can over 6 months before you have to pay for the package. Now, I did throw this on here. It was kind of interesting, and it may have been on a couple of other charts. We have won some awards that we didn't even know we had been nominated for. Ended up coming out. We were right at the top on some of these awards. Trade Room and Trading Software were the categories that we won awards for. So we're pretty proud of that, and so proud of it. And we believe that we've really got the goods, and apparently a lot of other people do too. So yeah, if you already own our indicators for NinjaTrader 8, then you already have the futures and Forex indicators. The Forex indicators, the futures indicators, the ones that we've been distributing, work on all NinjaTrader charts. The Bunt X indicators only work on Forex charts. Okay. All right. So that being said, are there any questions that we didn't cover during this presentation? You can ask either me or Praveen if there are any questions. I think most questions got answered, but if you have anything specific, we'll take just a couple of minutes and answer questions, but ideally we're going to go into more detail on Saturday, so if you could just come join us on Saturday, most of your questions will be answered, and we'll have more time available to answer more questions. So I don't see any questions coming, so it looks like we must have covered everything pretty well. But if you do have questions later, feel free to email us or go onto the website, and you'll notice on every page of the website on the bottom right side, there's a chat box. And there's usually somebody manning that chat box. Either Lisa or Connor or Praveen will be there to take your questions and chat with you live. Yes, as long as you register, AL, if you're here, that means you're registered, so you will receive a link to the video replay. Now, Armin, if you want to trade on your Thinkorswim platform but chart for free on NinjaTrader, that's what we have a lot of people that like to do that. I don't believe in back testing, Dave. It doesn't work. I've spent years analyzing people's back trading results, and then you turn on their trades and they don't work unless you know what you're doing, and not many people do. So back trading is for strategies, right? For automated strategies, not for discretionary trading. You can't back trade discretionary trading, because if you take 5 people, you're going to have 5 different characteristics, 5 different personalities, 5 different risk tolerance levels. Therefore, their rules are likely to be tuned to fit within their risk tolerance level. So there's no way to back test anything like that. Back testing is something that sounds really cool, and I've been at this for a very long time, and I was really drawn in to back testing and felt that, man, this was really great. In fact, I developed a system, a trading system that got the best back testing results that ever was. And I even ran it by the guys at the time I was on TradeStation, and I wanted to make sure I did it right. So I made an appointment with the guys at TradeStation. I said, okay, make sure I'm tuning this back testing right, because I'm getting these results that are amazing. And so I got like 3 different guys said, oh yeah, you got everything just right. Those are great results. I said, great. So I went and put it on TradeStation, turned it on, miserable failure. All right, so back testing results are really cool to look at, really compelling. It sells a lot of trading systems for other system developers. because I know, because I bought a lot of them, because I believed in the back testing. But unfortunately, their back testing is great as a framework from which to tune a system. Now, if you're determined to be to do automated trading, fine. You know, that's up to you. Um, I've been doing this a long time, and I have not met many people that can prove to me that they've got an automated trading system that works consistently over time. I mean, they work great for a while, but consistently over time. So I wasted thousands of hours trying to back test and learn how to develop auto traders and such. And in hindsight, it was all wasted. It was just wasted time, other than the fact that I learned something that it doesn't work. I mean, it can get you closer. I don't trade. I don't personally trade Forex, but we do have others that have, and they have reported very similar results. In fact, lately with the NinjaTrader 8 stuff, we've been getting rave reviews from a few Forex traders that are doing it. But I wouldn't necessarily, because I don't have firsthand knowledge, so I can't really quote firsthand. Any other questions? Those are good questions. I didn't mean to come back down on you on back testing, Dave. Um, that's one of those assumptions and expectations that I talk to traders about that really gets my goat and gets me riled up, because it's smoke and mirrors, and I fell for it for so many years, and I hate to see other people falling for it. Yet they just do, because it seems so logical, except for the fact that it just doesn't work. All right, cool. All right. Well, everybody have a great day. I hope we get to see you on Saturday, and if not, then maybe in the trade room, or maybe both. So, and thank you, Praveen. It was a very nice presentation, and very informative, and we look forward to more on Saturday. All right, everybody, have a great rest of your day.